Hello, this is Martin from seekedge, the channel for learning about investing and trading. Welcome to the pre-market analysis show for July 2nd, Friday 2021. So, once again, as usual, we are going to get deep into the charts and study what happened today and how it can be useful for us to trade tomorrow better. And let's see what the action. This is the Nifty 50 charts. So, this is exactly what happened today. Such a bearish candle. It's long wide range candles continuously appearing for the fourth time. It's very bearish, is ultra clear. BANKNIFTY, you have bearish 4 candles continuously, good solid bearish candles. What happened intraday? Let's get into the 15 minutes charts and see. So here it is, July 1st, right? It starts with a down move and then it had a consolidation, attempted slightly and then just broke down slightly, right? So it was more or less expiry with not major action. It was most of the day it was hovering around and consolidating in one zone, and then it broke down a little bit but then recovered. So today was no action, non-action packed expiry day actually. Bank Nifty, if you see, what do we see here is more or less same. We can see, the Bank Nifty also not breaking down heavily, right? So it broke down, consolidated in a range, attempted to move up, didn't work out, then attempted to move down, didn't work out. So it was range bound day, you can say. But even though it was range bound, if you take the total, right, that's the, so this is the intraday action was range bound, but overall points from the top, if you see, it's good amount of fall, near 200 points of fall is there, right? But in the middle part of the day, the most of the day, it was indices consolidation that was happening in both the indices, right? So let's speed up on this. Candlesticks we have seen, price action we have seen, and so some few other points remain the same what we discussed this other day. If you go to the daily time frame, you can see that there is a lot of bearishness in addition to the 4 continuous. You can see that there is huge resistance that you can see. Look at this, right? It has been touching this zone, right, multiple times. 1 2 3 4 5 6 times it attempted to break this 815 800 to 5900 range 6 times continuously. A lot of resistance. And yesterday we discussed that there is an M pattern and there is a double top that's happening, right? So this could bring it, if it works out, to the next support level. So that scope is still there, right? Bank Nifty also, you have some kind of double top M patterns which could bring it down quite a bit, right? So that all that continues to be here, right? So it's bearish charts that overall that we are seeing. Let's take a closer look on the support and the resistances. We can very clearly see that whatever support and resistances that we had drawn the other few days holds good, right? Look at this, it is resisting at this area. We had a band of resistance that's on 800, right? 775 to 900 range. So it has been a zone of resistance. Then we have some kind of support that you can here see. If you look at this, you have a support here. No, this area has a support. That's where market exactly halted, the near to the 15,700, 15,670, 6,700, that range, because multiple times it has taken. You can see that this candle, right? Next one, third one, right? Fourth one close there, fifth one start, no, then another seventh one. So where the market is right now is also at a very good support level, but immediately below that you have even more better support level, which is 15,600. There also we had seen some hold, right? 1, 2, 3 holds there. So 15,600 is the best support if it falls below, right? And from 15,600 it is little steeper till 15,450 it can go, right? So that is the final non-bearish or not heavily bearish support point. You can say beyond that it is not good. It can correct a lot. It would be really bearish, because this zone of 15,600 is at 23. So 700, 600, 500, right? And below that it's not good. 500 is 600 is also, yeah, it's actually 600. This one is a Fibonacci 23 level support. It's a confluence of multiple supports, previous support and previous resistance plus Fibonacci. So it becomes, this one is very critical. So below 15,500 is not good, or 15,450 to 500, that band, what you see. Below that, let's hope that market doesn't go. So that correction up to that level may happen in multiple days till the end. For this next 1 week probably it may be hovering around, and it may take some time before it can go here also, if it goes here, because the results are coming in July second week onwards. So that time it would anyway spike up everything, right? So that's about support resistance for Nifty. Bank Nifty, similarly we have drawn the band of resistance here at 34,800, 34,600 levels, and it's exactly where the market, the indices have stopped, exactly the same place. And further below 34,000 is the point, just like 15,500 is for Nifty. For Bank Nifty it is 34,000. If that is breaking, we have a major heavy bearishness that would come, right? But if you look at that, we can see that Bollinger, right? The Bollinger Bands, if you look at that, we can see that market is clearly consolidating, right, within a range. It is range bound, not exactly bearish as of now. From that range bound movements around the current area, if it is turning into bearishness below 15,500, it's not good. This is Bank Nifty. Similarly 34,000 for Bank Nifty. Nifty, this 6,500 zones, right now Nifty is also, Bollinger Bands is, volatility contraction can be clearly seen and consolidation is seen clearly. But the moment it dips down from here to from below here, sorry, from below this 34, this 15, 400, 300, 450 kind of levels, it's not going to be a consolidation anymore. It would be deep correction that would be starting, right? So that is about the support zones. Now Bollinger Bands we have seen, price action, candlesticks, everything we have seen. Now let's look at what is the momentum. The momentum is continues to remain in the sideways zone for Nifty. Bank Nifty, the momentum continues to remain, and it is further dipped also. It's in the sideways zones. Trend, if you see, trend has crossed over in Bank Nifty and it's in the bearish zone. Nifty also crossed over in the bearish zone and it is rising, right? So bearishness is increasing day by day in Bank Nifty and Nifty. It is very evident. from the candlestick itself we can understand that, but we are further confirming that the momentum and the trend both are sideways and bearish in the case of both the indices. Now let's move on quickly to the open interest analysis. So futures, open interest, if you see clearly both indices are having bearish short buildup. Short buildup is right, the open interest is increasing and the price is decreasing, right? So it is short buildup. Now options data, if you see, we can see that today was the expiry, so next expiry actual trading may be starting from tomorrow, so it's not fully reliable, but what it indicates on the 8th July the open interest highest is at 15,800, right, which is not gone good today. 15,700 is the next, and the support also has is seen at 15,700. Below that you have 15,500 which we talked about, and hardly any other supports, right? So the major call rating is happening at 15,800. So 15,500, 800, if it is able to hold on for the next 1 week, then probably it will regain and continue with the rally. But if 15,500 is broken in this week, then it may not get back very soon to the 15,800 again, or even 15,600 also a very far away target. It's called, right? Let's look at what is volatility talking about. VIX is very interesting. See, it closed at 12.8 and it dipped as low as 12.3. This is historic lows levels. If you see, the maximum it has gone is still 8.9 or something, right? So this is very, very low volatility that is having. Day by day it has been falling from several days, several weeks in fact. So there is a chance that VIX stops and then spikes back up, and so everything will not be VIX is mean reverting, as I said multiple times before. It does not always continue to go down forever, right? So any price movements would never, or price indicators or price charts would never continue to go. It would have times when it will spike back. Since it has gone so much for so long time, there is a chance that the VIX can shoot up back, at least for some period of time, right? So that is something that so VIX shoot up means the price, the premiums of calls and the puts, everything will increase, right? Both calls and puts will increase, right? So the market suddenly becomes very choppy, and so whenever there is a trending thing that's happening for a long period of time, we should expect that it can mean reward, especially in the case of volatility, right? So that is what VIX is saying. Now if you see the IV charts, we can see that the implied volatility, right, continues to be above the historic volatility, which is not that bad, but the point is the IVP is 0.2, is hardly any IVP, so it's not good for option sellers even now. So right, whenever the VIX is rising, or whenever there is an anticipation of a VIX rising, it's not that good for option sellers, right? But once it has started rising up and reached a level, then option sellers can hope for a mean reversion again and then take the trades accordingly. So that is about volatility, right? The currently consolidation is volatility contraction. Volatility is the lowest of lowest levels, and there is a probability that it can spike up in the coming days. Foreign institutions, what did they do today? You can clearly see that they were selling today also, right? Heavy selling, actually 1,200. So 1 2 3 4 5 6, except for 2 days, right? The entire June and July also now the selling is continuing, and domestic institutions has been saving, and today also it's saved by buying nearly 900 crores. So this is happening from 10, 11, 12 days continuously. Domestic institutions are buying. That's only reason the market is there. If FIs were selling only was there, we would have fallen 15,000 long back. Sector watch. Sectors. What are the sectors doing? Let's see the heat map and see what sectors did well and what sectors failed to do anything. Right. So FMCG has done well. Automobile, pharma, and energy. So FMCG, Asian Paints has done well. Automobile, Maruti and Tata Motors and Bajaj Auto, all of them have done well. And Pharma, Dr. Reddy's and Ciplas and almost all of them have done well. And that's it. Financial services and banking, bank nifty components are all not doing it all good. That's the reason why market did not go up. So there was buying that happened. So let's look at the charts of the indexes for the sectors. IT, how did IT do here? In the heat map you can see the IT didn't do well actually today, right? Both Infosys and Wipro and Techem both all went down. What happened in the chart of IT is, see, IT is clearly bullish. I had been saying that, the dollar is strengthening, so it is very good for IT, and IT is moving up. It's in the bullish zones, and there is a bullish positive reverse divergence which absolutely worked out. You can clearly see that it, because of this spike happened, right? This up move is because of the momentum positive reverse divergence. It worked. Now if this momentum is dipping here and taking a support at this bullish zones and then bouncing up, right, you will have another positive bullish divergence that could happen here, and then which can take it further up. So it is fundamentally the US dollar impact and technically the positive reversal. Both are saying that although it corrected today, it's only a temporary correction, and the IT is what is going to take the market up if at all the market is going up, right? Metals flat as before. FMCG has done good. FMCG also is in a very bullish zone. There is a positive reverse divergence that you can see there, which took it up, and then another positive reverse divergence, small one, has come, and it has taken a bounce from the bullish momentum zones, and it is very likely that we will shoot up. Automobile is resisting at the level of the bullishness, so it is not that good, right? It can come down. So only if it goes up we can say that it is time for investing or trading in automobile on a short term basis. Pharma is bullish already, we know that, right? It has climbed up and bounced up today. You can see a green candle also here. So pharma, FMCG, IT is bullish, right? Others are sideways and yet to get into the bullish zones. That's what the sectors. USD INR. Interesting thing happened in USD INR today. USD INR broke out of the previous resistance zone today. We have a green wide range, and the next target is near to 75. So the dollar is strengthening and the rupee is depreciating. The rupee is getting weakened day by day. Is the reason why IT is performing, right? So time to go long or to have derivatives long or do bullish directional spreads on options of currency may be a good idea, right? Gold is hovering around the same support zones, right? It may take a lot of time before it can move, but it's at a support. There's no breakdown or breakout. Global markets are flat as of now. You can see that Nasdaq is down, bearish slightly. So US markets are flat as of now at the time of the recording. So what is the wrap up, right? Candlesticks continuously showing us bearishness, right? and price action is right. Consolidation can be clearly seen with its range bound. If you look at the short term, Bollinger Bands clearly say that we are at a major support zones. At the same time, we are resisting several times at a critical 1500 zones and unable to break above that. Divergences in momentum has failed. Momentum is in sideways. Trend is bearish on both indices, Nifty and Bank Nifty. Open interest is showing that bearishness. PCR put call ratio is bearish for both Bank Nifty and Nifty. Volatility is very low. FIAs are selling, DAs are saving the market from crashing. Sectors IT and FMCG and pharma is doing good. USD is strengthening, rupee is depreciating. Gold is at a support levels. Global markets are flat. So, what are the actionables for tomorrow? Tomorrow is a Friday. There will be least TK if you are playing on weekly. If you are playing on monthly also, it's the beginning of the month, first half of the month, first 15 days. It may not be a good idea. It may be a good idea to play intraday, but tomorrow is a day where you can take positional options, non-directional, right? Monthly or weekly positions can be taken, right? Don't expect theta day for intraday. So positionally, since the VIX is very low and it is likely that it may spike up after some time, right? For monthly and weekly also, it may be meaningful to take Vega positive options, non-directional strategies, where if the spike of the IV comes, we can benefit from that. So that's the actionable, and that's a wrap up of what I have for this week. Please subscribe, like, and share to your friends. It matters a lot to us. Happy trading, happy learning. Bye.